Is the Bitcoin bottom in, and is the carnage over? That is the question that many of you may be wondering. Or is this simply just a relief rally, a dead cat bounce, which is going to be sold into? We're going to attempt to address that in today's show, so stay tuned till the very end. Smash the like button, hit the bell notification, and subscribe to the channel. You can see a very, very different looking day over here on the Banter Bubbles, with the daily now green, but the weekly still mostly red. A lot of work to do from the bulls to pick things back up and reclaim some of those key levels. Monthly, of course, also down, with just a few strong coins which stand tall amongst them all. Hourly, most of the coins are bouncing. We'll discuss some of the trades that I took yesterday, and we'll have a look at what to expect next. So smash the like button, hit the bell notification, and subscribe to the channel, and we'll continue on with the show. So yesterday, of course, one of the biggest liquidation events that we've seen. If you do look at this chart over here, the green bars show the number of longs that were taken out of the market, and it was just short of $1 billion. And now you got the shorts that are getting wrecked, right? We have 229 million in shorts, late shorts jumping into the market, creating a little bit of a squeeze. There is a possibility for a little bit more upside off of the squeeze, and I'll show you exactly why. If you go also onto ETH, well, the total ETH liquidations on the longs was probably one of the highest that we've ever seen over here, with a major outlier candle over here towards the upside. So a lot to look at. There is your ETH chart, right? Coming all the way back, literally down to that $2,120 region, which was your prior range low. That was where we broke out of the ascending triangle, threw back into that as support, and held that exact level. So we spoke about yesterday, ETH, being very, very oversold. I know that, as a trader, we say there shouldn't be such a thing such as overbought or oversold. But I guess in the context, it's taken in context. In this environment, this was quite an oversold move relative to what we saw with Bitcoin. And that was because Jump Capital were liquidating massive amounts of ETH and selling into the market pretty aggressively, while you also still have Grayscale, which is dumping ETH at the same time. So definitely a little bit of an outlier event for ETH. And then I think one of the most important charts which helped me to govern my next move, at least, which we discussed with Whale Room on the live Zoom session that we did during the New York Open yesterday, was this chart over here, which is the VIX. VIX is the volatility index for the S&P 500. And what this chart typically does is, when prices, or at least when the VIX indicator spikes towards the upside, this shows extreme volatility, usually off the back of fear within the market, and that's where you get those major sell-offs. So I've marked off with a vertical line each of the times that we saw the VIX spike into those regions. But just to give this perspective, since the VIX creation in the 1990s, which is as far back as this chart history goes, well, this was the third biggest spike that we've ever seen with the VIX. The biggest one being the 2008 great financial crisis, which occurred over here. You can see the VIX coming in, or at least spiking all the way to the top side over here, and pretty much bringing the S&P 500 down to 819 points. And it did come down again to 673 over the coming months. And then that was the ultimate low. The VIX then started to recontract back down, and you led into a face melting bull market. When you look at the last time that happened, well, this was on the 9th of March, the VIX spiking up to those insane heights over there. And that was the exact COVID low for the S&P 500 at 2,320 points. And since then, it's gone up to rally 142% over the coming years. Now, again, another spike like that, the third biggest on the VIX. So I do think it's food for thought. Some other notable mentions of when the VIX got to those extremes, I've marked them off, and you can look at the correlation on the S&P 500 chart. And this is what typically followed, right? W pattern over here. VIX came to extreme heights. S&P 500 did go a little bit lower following that read over there, but soon after started to climb. If we go a bit forward over here, same thing, right? Close to marking the bottom, and it went a little bit lower, but then in the preceding months, obviously continued to rally towards the upside. So there's each of those times marked by the vertical lines. There you got the COVID one marking pretty much the exact low. And now we have the VIX again having spiked to those levels. So what I personally did was I looked for long opportunities. I'll show you why and which ones I was looking at. And could it just be that it's a relief rally and we're going to get faded and come down one more time, or stay until the end of the show? Because I'll address that when we go into the lower time frame charts like the daily. If we have a look over here at the stock market as well, given this information over here, we would expect that sometime soon the stock market should be putting in a bottom, because that's what we've seen in the prior time. So most of the time, this is going to be an opportunity to start to look to establish longer term positions. Now, for those of you out there who want to diversify your risk away from crypto and you want to trade other markets like stocks, forex pairs, commodities, things like gold, silver, Brent crude oil, or the S&P 500 or NASDAQ, you can do that over here on Prime XBT. I have been partnered with them for quite a long period of time. Great exchange over there. So I'm currently monitoring the NASDAQ and the MACD over here, waiting for the MACD to start to cross up. And then I'm going to look for any higher low over here to start to go long on the NASDAQ. But you can see on this daily candle over here, you have a pin bar candle on the daily. Look at that over there. That is the sign of a major reversal. Now, if any of you do want to trade alongside me with this, there is a link in the YouTube description below. If you go through to Prime XBT over here, when you click that link, it'll open up this page. You can actually decide for yourself, do you want to get a sign-up bonus of 20% deposit bonus? So it's up to $7,000. So if you, for example, deposit $10,000, well, then you'll be getting $2,000 at least commission on top of that, which you can trade with, or you can choose the 25% discount on trading commissions, which will reduce your fees for a lifetime, as long as you use that particular code. If you do want to join along, it is there. The other thing that we're monitoring in terms of these traditional markets is, of course, the DXY. Now, the DXY has had a pretty big move towards the downside over here, and we said this will take time. So watch, and in anticipation, if the DXY does spike up over here and test this as underside resistance, that might create one more leg down in the crypto and stock markets, and that would be the next buy the dip opportunity. And then you're looking for a greater breakdown, similar to our little drawings over there, which may take a couple of weeks to really start moving towards the downside on the DXY. Given all the carnage that's happened in the market, of course, around Japan, watch yesterday's show if you want to know more about that. There has been a repricing, or in the probabilities of what may happen at the next interest rate hike, which you can see over here is due for the 18th of September. So coming up in a couple of weeks' time. And now it's got a 74.5% probability that it's not going to be a 25 basis point rate cut, but instead a 50 basis point rate cut, which is pretty significant. Watch this chart. The histogram will change over time as we start to get closer and closer to that particular date. But it's looking more than likely that we're going to have the first proper rate cut within this cycle. So we'll keep an eye on that. Here is the Nikkei 225 index, the Japanese markets, at least straight uptrend over here, throwing back into major support. I did outline this on yesterday's show, saying that, I don't see any huge reasons yet per se in terms of the chart of why to panic, because you are coming into major support, higher highs, higher lows. And look at that demand started to kick in at 30,802, holding a support and now moving towards the top side. I know that they did halt the trading in the Japanese markets yesterday, so we'll see what happens today as everything unfolds. They'll obviously try and slowly but surely control the markets, right? Now, Bitcoin is currently in a descending broadening wedge, right? So if you look at this, this does have a bullish price target. That's what a broadening wedge looks like. And if you look at the Bitcoin chart over here, you can see it nicely on this time frame. Now, we've overlaid that with the extreme fears that we've seen within the market, coming down to extreme lows, right? And if this is in fact a bull market, that presents probably the best ever buying opportunity. And again, you don't need to go all in one trade. You can take your time and start to dollar cost average in day by day over the next, let's say, week or two. I'll show you why as well. I have another chart that beautifully depicts on a heat map what it looks like when you come down into these levels. But using this chart over here, you can see since this cycle started, every time the fear and greed reset to these low regions, anywhere below 40, between 20 and 40, it's marked major lows, and you see price action bouncing off of that, continuing towards the upside. So I know it doesn't perfectly meet the broadening wedge on this time scale because I have it on a line chart, but if you move it to bars, well, then you can obviously tighten that up a little bit and it would look something like that. So it does meet the criteria for broadening wedge, which would mean that by this definition, that wick should be the bottom. Could you revisit closer back towards those 50K lows? Absolutely, that's in the realm of possibility, but only time will tell. We'll need to see the new momentum that comes back into the market. Now, if we look at this and we color code the fear and greed, and we have a look at the cycle from 2018, so that goes into the 2019 bear market, the spike up that we had with a fake out, eventually coming into the COVID lows, leading into the bull market, and then back down into the FTX collapse. This is your picture, right? This is where you see the lowest on the fear and greed readings of 0 to 10. And if we simply put that on, that was extreme levels, right? That's your COVID lows over there. And then that's near your FTX collapse. Let's put it on 10 to 20. And you can see now we have our first little dot over here in the 10 to 20 region. If I zoom in over there, there it is, 10 to 20. We got that read over there with a read of 17 on the fear and greed. Moving on to 20 to 30, well, you can see this is where your major bottoms are formed. So in that sense, it's a pretty good sign that things reset to extreme levels, which is exactly what's needed, in alignment with what we saw over here yesterday with $1 billion worth of liquidations. Usually you're looking for major turning points or resets within the market at around 300 to 400 billion worth of liquidations, or million worth of liquidations. We had $1 billion worth of liquidations taking place over there. So this, for me personally, with the fear and greed reset, was an opportunity with the mayhem in the market to start to open up some new positions. So I did drop in whale room. I went extremely degenerate with some super low cap, high risk, high volatility plays. And the ones that I was looking at was 𝗕𝗘𝗣𝗅, Brett, Ponky, 𝗕𝗘𝗣𝗅, Resistance Dog, Popcat, Book of Memes, Boom, Harry Potter, Obama Sonic Inu 10. When the cat, I added to Giga. I was posting all of this live. And the interesting thing is you can see the reactions over here, in the preceding days when the market is hot and happening. Look at the amount of reactions and emojis on those prior posts, right? All good. And then when I start posting this, right, adding Giga, look at that. Only a couple, 3, 1, 2 people over there. So even within our Discord where I'm hand holding and guiding people, there is still doubt within these markets. This is the psychological phases that people move through, and the psychology doesn't seem to change, right? Over here, I said I'm adding resistance cat, and I gave all my reasons why. And you can see if you go to the memes, well, this is what the memes look like one day later. Pretty much most of them putting in double to even triple digits, right? I don't think there's a single one here that didn't put in double digits. It's high double digits in the 80 to 90 percentile region, to even triple digit gains on some of these coins. So here's Giga. That's one that I, of course, added over there. Lock-ins also in my portfolio. We have a whole bunch over here that we had a look at. And here are some of the coins, right? So my position is up nicely for the day, up $7,500. I have Brett. I added Casper as well yesterday. I have some Sui in the positions over there. Here's the Giga position that I took. There's the Harry Potter one. Popcat, I also added a little bit of that. I added Banana, I added Wen. So these were some of the trades, right? You just have to nibble in. Now, when the market does eventually come down, because there is going to be a resistance level that will be met, and you'll start to see a slight pullback within the market, start to look for opportunities like this again when the fear is very, very high in the market. So also, to let you know, if you do want to trade any of these, by the way, I took most of these on BitGet. BitGet seemed to list the majority of them. There's also a link for that. If you do want to sign up, you can claim up to $30,000 in sign-up bonuses over there for BitGet. So use the link below, and then let's continue. Okay, looking at the ETF flows. Yesterday, the ETF flows were slightly negative. Remember, these are still normal people who are buying the Bitcoin ETFs. They could also get scared and pretty much call their broker and say, I want one out, and then consequently they will be selling, right? So that's one thing. The other one that I want to have a look at over here is, if we go through to the top, is if you look at the ETH ETF overview. Well, yesterday Ethereum actually had positive ETF flows, surprisingly, coming down into those low levels. There must have been some big players that came and scooped some of that up. We saw a lot of interest coming back into the market yesterday as well. And if you have a look at this, this is showing the YouTube views. YouTube views went to massive numbers, with a lot of the retail coming back pretty much in that dip, right? They come back during the extremities, either when it's super high in the market or when you have a mega dump. So maybe this will be some newfound interest that came back into the market yesterday, thinking that it's a great opportunity to start to get in, and this will help in the formation of that higher low. So you can see, if I just zoom in over there, look at that marked uptick across the majority of the channels. In terms of the broader scheme of things, where we are within the cycle, remember, if I reset the zoom over here, well, we've only been reaching, around this $1 million mark per in terms of YouTube views across a broad spectrum of channels. All the main channels are listed below. And in the previous cycles, in the last 2021 bull market top, we're seeing around 4 million views across these different channels per day. Now, we would think that as the market cycle gets bigger and bigger and new retail comes back into the market, because it's a growing asset class, we should breach that level well beyond the 4 million. And this also gives me, or it's at least a little bit of hopium for you guys, that, the cycle is not yet over, right? This is just a dip in the broader bull market. And when we look at this, it is just a dip, right? From top to bottom is 33.58%. Now, in terms of this cycle, this is one of the biggest corrections that we've had in this cycle. That's your first one, second one, third one, fourth one, and fifth one. The second deepest correction that occurred was the third one, which was 22.10%. That was this one over here, 22.10% down, and it took 102 days to come out of that. This is not only the deepest, but also the longest correction that we've had within this particular 2024 bull run, or let's say 2023 to 2025 bull run, if you consider the lows to be the start of that bull market at $15,500-ish following the FTX collapse. So with that being said, we should be closer to the end. They're not. But when you compare to the other cycles, 2013, 2017, 2021 cycles, it was very normal to see dips even as far as 60%, 40 to 60% sell-offs within a bull market, and price very quickly rips towards the upside. So it's something to keep an eye out for. This has changed the duration, or at least, and I wouldn't say it changed the duration. I was always looking for a major cycle top to occur sometime during 2025, most notably probably the third or the fourth quarter. And this actually gives additional validity to that. The fact that we're in this correction over here, because if prices continued at this trajectory that we were in over here, and you just kept ripping, that would have turned it into a left translated cycle, and would mean that we would be unable to keep this momentum in a sustainable fashion, and that would lead to a significant crash a lot earlier. This is a preferable outcome, is to see more chop and consolidation for a longer period of time, and maybe slowly but surely into the election phase, prices do start to grind up and reattempt towards the highs near the end of this year, and that should make it a much longer cycle in alignment with what I've seen in the price cycle. So that's one thing to consider and look at. And you can also look at the previous returns 1, 3, and 6 months later, or even 1 week later if you want, on this chart over here, following the biggest dumps that we've seen within the price cycles. Now, if you just take a few of these, what you'll notice is that 3 and 6 months later, most of the time, over 95% of the time, price is trending much higher following those corrective phases. So we can have a look over here. Let's look at some of the more recent ones. If you look at the more recent one, which was the 17th of August, 2023, on the bottom over here, that's when Bitcoin was trading at $26,641. The drop was 7.36% on that particular day. And if you go 3 and 6 months later, Bitcoin was trading up 42.5% and 86.77% respectively. If we go to some of the deeper corrections, like on the 12th of March 2020, where Bitcoin went down 39.63% in one single day. 1 week later, Bitcoin was trading up 27.42% higher. 1 month later, 40% higher. 3 months later, 103% higher. And 6 months later, 108% higher. If we look at one or two others, let's take similar drawdowns like this one in 2018, where it was 21% down. A week later, we were 29% up. A month later, 44%. 3 months later, 40%, and 6 months later, well, you had put in the top by then, that was around only 2% higher at that particular point in time. So a lot to look at over there. Statistically, what is going to help the numbers go up? Well, this is one thing, the M2 money supply. Tomorrow, which is now today, this is as per the tweet, the US Treasury will begin buybacks with $30 billion worth of buybacks per month, right? Which is pretty substantial. So you have here the whole tentative schedule of how they're going to be doing this buyback operation. This is a minor form of quantitative easing. And this is what the M2 money supply chart looks like. You can see the M2 money supply is breaking out, right? The M2 money supply essentially refers to the liquidity within the market. And as the liquidity goes up, the liquidity must flow somewhere, and it tends to move into the market. So we are looking at that. Now let's go back to Bitcoin and the chart over here. At the end of the day, we caught within this absolutely enormous range, with the range lows to the range highs. And here you have the range lows to the range highs. You deviated that level. You came pretty much slap back straight into the mid-range. Now, I always thought that this was a possibility. I must say I didn't foresee that it would happen this quickly, but it was always a possibility to revisit into the zone. Now, the cash position that I'd been building up since October, which was the stock market lows, this was within this region. This was the last significant buys that I made into the market, was in this zone over here. I am now personally looking to reallocate that, the money that I've pretty much been building a cash position on. My initial buys were down here, and I've pretty much held. I added my last little bit in the October lows for the stock market and rode this all the way to the top. I'm now looking to allocate into this region over here. Now, again, as mentioned, go in with a DCA approach over the next couple of weeks to months, probably the next, probably go a bit more aggressively over the next 14 days, but still leave enough that you have the ability to continue to DCA for at least 12 weeks, right, into this region over here. Because if we do roll over again, and we're probably better off getting a pen, which is a little bit sharp over here. If you do roll over again one more time and come down, the recovery process may take some time. So giving yourself enough time means that you'll catch the average of this dump, right? It means your average buy will probably be somewhere around here at about 50K. Don't underestimate the power of dollar cost averaging. It's incredibly powerful. Any of you can Google Bitcoin dollar cost average calculator and work out, if you were to put in a small amount of money from the absolute peaks, the peak, choose 69K, 70K, whatever the peak is of a prior cycle, and showcase daily dollar cost averaging, what your results would have looked like over time. I can tell you the answers. You would outperform the majority of even professional traders, right? People that have their certified market technician courses and they work at firms. You would literally still outperform those guys over time, which is why it's so important for everybody to still have a dollar cost average strategy when it comes to trading. So that's what we're looking at for Bitcoin. At the end of the day, look, there is still going to be resistance over here. Price is now below the 21 exponential moving average, with that exponential moving average angled towards the downside. For those of you who have done whale school, there is a link below if any of you do want to join. But for those of you who have done it, you'll know what I have to say about that. If price is below the 21 EMA, any spikes that come up into that region theoretically become resistance, and that is where you want to de-risk some of your positions if you are holding too much risk. Now, what is the average cost basis for various different sectors, whales, miners, etc.? Why do we want to even know this? We want to know the average cost basis and the comparisons between each of those, because it shows where there's a major psychological shift that occurs within the market, and psychology tends to drive the markets. Now, what we can see over here is that because the ETFs only recently came into play, their unfortunately average cost basis is $65,000, which means that the majority of them, if they're aped in, are already underwater, right? Binance traders who have been in the market, at least the retail that have stuck around, their average cost basis is sitting at $55,000. So currently they more or less break even. The mining companies, which is a big one, very, very important, because the hash rate tends to drive price. And if the miners stop mining, well, the hash rate drops off and price usually follows. They play a major role in what takes place within the Bitcoin price action on a day-to-day basis. They affect the on-chain metrics, and their cost basis is at $45,000, right? And there is a possibility you can break below that level, right? It says over here, below this level in the past downturns was May 2022, March 2020, November 2018, and that confirmed the bear market. So you don't want to break below the miners' average cost basis, right? We don't want to break below that. Let's highlight that over there, which is currently coming in at $45,000. Now, going back onto this chart, you can see over here, 45K comes in around this region. There is a possibility that you could spike temporarily into that zone, but you don't want to spend time there. Your old whales, which are the real OG long-term hodlers, you know, their average cost basis is 22K. And in the history, of course, this cost basis moves up over time. It's the purple line. It's never been breached, right? Never, ever, ever been breached. So that is very, very important to watch those levels. Okay, in terms of the funding, it's still negative on the weekly. We'll see how the week closes. This is going to be a very, very important week. And we can also look in terms of the order book and what's happening over there, where the big buys stacked. I do drop this daily on Whale Room, right? By the way, if you ever go into Whale Room, under this section over here, institutional charts, you'll find a whole lot of information over here. But if we have a look at this over here, what we can see is for Bitcoin, there's clusters of sell orders, which are currently staggered between 56 to 57,200. Why am I telling you this? Because expect that's where you're going to find resistance, right? Those are the sell orders. If price bounces up into that zone, expect there will be sell orders, but they are defending the average cost basis of the miners, because you got big buy orders, which are currently set between 47 and 47,500. You do also on Bitcoin currently have a negative delta as per High Block Capital over here, which gives short-term favor towards the upside, probably spiking price up into these levels that I've given over here between 56 and 57. So that is one area of interest, right? Now, if you line that up with the chart over here, we've unfortunately lost the 200 moving average as well as the 200 EMA. That's the dark and the light blue one. The 200 EMA happens to line up exactly with this yellow line. The yellow line is your pivot level to get the RSI back up and change the momentum. And that lines up at 59,500. What does this mean? Very, very simply put, in alignment with the orders that I've shown between this 57.5 and up into this zone, this becomes a major resistance zone which price needs to get through. It's going to be a challenge. It's going to be a challenge, right? So watch for price as it spikes up over here, testing this as resistance. The first hit of that level more than likely leads to a big rejection. The next move down, so this is probably where you want to offload some of your positions should you be underwater. Rejection from that level, look for the next high low. How low will you go? Well, oftentimes I'll target 50% of the wick, which means you may come all the way back down to $50,000, and then you're looking to springboard hopefully out of there. So it is going to take time, right? It is going to take time. At the moment, when you see a big move like this towards the downside, you can essentially expect a ranging choppy market, right? So if price comes up, you're going to range between the bottom and the top side over here. My most optimistic case would be, you know, that you come back towards this wick and grab some of that liquidity. So I'm expecting, you know, something like this, and then slowly but surely you grind up. And this is why I say give yourself time. If you are looking to deploy cash, probably DCA some, dollar cost average some in a little bit more aggressively over this time period, over the coming 2 weeks or so. And then you can continue to keep the finger on the pulse, or at least on your foot on the pedal over here, DCAing in for the rest of the year. Give yourself a couple more weeks. That's what I'm looking at over there. Okay, same thing over here. We hit this level. This was a high probability bounce zone. We said that, you know, no matter how price gets into this level over here at 50,700 or 50,576, we do expect a bounce from that level, a short-term bounce. Now, if we are going to sweep the 40K zone, which would be our worst case scenario down here, there we go. That is still a possibility. Then we still expect bounces along the way. And currently that's the case, right? So it's just monitoring the trend, right? Lower lows and lower highs. If you get the rejection over there, that's your lower high. Then you're going to come down possibly for a lower low, right? Spike up again, lower high, lower low. That's one possibility. So we are going through multiple different possibilities, because when you have a major pump or major dump in the market, it creates inefficiency, and then you need to reevaluate what could happen next. Remember that the reality of trading is this, right? It's a if this, then that scenario. So if this happens, then you're going to do that, right? If this happens, then you're going to do that. It's a if this, then that scenario. That's how you trade. So my plan currently is to monitor as price action moves up over here. And if there is signs of weakness and it looks like there's a rejection, I'm going to de-risk some of my positions. Some of these earlier trades that I've taken now, which have got me up on the day, I'm going to look to reduce the risk, raise the stop losses, possibly exit some of those positions, and then I'll look to re-enter lower. If we go on to the 4-hour time frame, you can also see lining up around the mid-range over here. You also have a high volume node. This is going to be your point of control. That's at $62,000. Look at the volume on the left-hand side over here. We're already hitting an area of high volume, similar to what I showed on the order book from Trading Light. This is why there is some selling pressure coming in already at 57,500. If you can break and hold above that, you open up this as a little bit of a vacuum, right? It can pull price up possibly as high as $62,000. So we are watching that over there. For those of you who want to make it all back in one trade, remember you can go on to Bybit. If you are trading on there and you're bringing in decent enough volume, well, if you even just bring in $1 of volume, there it is, just $1 of volume, gets you a raffle ticket where you can win the Cybertruck, right? So pretty easy. Use the link in the description below. It's over here. There it is, Tesla Cybertruck. Click that, join into the competition. Where am I currently ranked? I am 18th. I'm currently ranked 18th. Remember, this is not a, if you come first, you win. This is going to be drawn as a raffle, but I'm 18th in terms of I have the 18th most number of raffle tickets. Cool. To win the Cybertruck. If you don't want it, by the way, they will give you the money equivalent of what it costs. Okay, total 3. There we have it. Big spike down. This is going to be major support. I outlined that over there. Let's see if this can break back and get into 557. By the way, one more thing that I want to say with regards to Bitcoin. Look, if you do see Bitcoin starting to break above some of these key levels, breaking back into the old ranges, you know, 60 to 62K and holding there, that will be an incredibly positive sign, right? If you see it get back above this zone over here, holding above $60,000, and it just pretty much gains acceptance there. What is acceptance? Well, it fails to break down. So it pushes up and it holds, and it just won't come down. That would be an incredibly bullish sign, at which point you would say, well, this was a mega shakeout and bear trap. Okay, cool. We can have a look at some of the other coins over here as well. You can see the meme coins, right? Pumping very hard. Giga up 46.8%. Now, as I showed you, I did add to the Giga position, even though it didn't hit the perfect level, right? So I got $8,500 worth of giga over there. This would have been the ideal situation, is coming down into, here we have it, 4699, anyway, into that zone. I was looking for a bounce, but I could see the way a wick was developing, the demand coming in over here. I thought, let me scale in. Had it come a little bit lower, I probably would have put more into the position over there. So that's one. Let's see, resistance cat. Okay, very, very low market cap, right? Very low market cap, only 1.62 million. My speculation is that resistance dog will pump. That is a leverage bet on Telegram or Ton. And I speculate that resistance cat, when the cycle comes back into full force, I know no one's thinking like that now, but that's why you need to do what others don't want to do when no one else is doing that, which is no one is really thinking about these things. When eventually the narrative of cats flipping dogs comes back into play and resistance dog has already had a mega pump, then I'm looking to resistance cat. There we go. That's it. As simple as that. That's one. Here's some of the other ones that we have. Okay, Retardio. I don't know why this thing has so much bullish momentum, but we outlined this already a couple of weeks ago to the whale room, looking for the spike into the zone, and pretty much that dip provided that spike. So had you taken that trade, right, you're already up 75%. So a lot of bullish demand coming in. These ones, of course, meme coins dump the hardest, but when the market turns, they pump the hardest. So if you can gauge and identify the direction of the market and whether it's a risk on or risk off type of environment, then you can take a leverage bet without the risk of liquidation, right? That's the benefit of meme coins. No risk of liquidation. You just buy the spot and you hold, but you get the magnitude of the leverage moves on an exchange, right? Okay, let's have a look at some of these other coins. Okay, Brett reclaiming a key level over here at 0.080 and looking for a big move up. Of course, resistance is going to be around 1180. Resistance coming at 1180. We can have a look at Casper. Let's have a look at Casper. So very, very happy with this buy over here on Casper. You can see into the mid-range over here, perfectly holding that level. Look for a reaction out of there. We got it. Let's see. This is traditionally been one of the strongest coins, so we'll keep monitoring this. Okay, let's see Solana as well. A nice move from the $120 region over here. You definitely want to continue to hold this. You can keep the hope alive in terms of a closing basis. This is theoretically still high lows, right? On a closing basis. Of course, yes, the wick came down, but on a daily closing basis, that would still be printing a higher low. And now we'll see if Solana can actually get above some of those key zones over here. If it can break back and hold above 160, then we can target back to 200. Okay, let's see. What other ones have we got over here? Just drop in the chat section if you do have any requests, and I'll make sure to bring those up. All right, let's scan through. Anything else noteworthy that I need to mention from the meme coin list? Okay, let's see. How's Foxy? Okay, lost the range low over there. Ponky. Okay, nice move over here on Ponky. This is the monkey on the Solana chain. There we go, coming into a key level. Beautiful, beautiful zone over there. Big bounce. Let's monitor. Let's see how prices react. Rune, yeah, let's go to Rune. Rune, very, very important. We must look at Rune. Okay, let's see. Okay, yep, you got the reaction over there. So we're looking for signs of strength. At the end of the day, please don't get me wrong. These are still downtrends, right? These are downtrending. So you have highs, lower lows, lower highs, lower lows. You expect, right? Probably lower highs. It is going to take time to reverse the trend. But if you're simply looking for the trades, right, you're looking to trade it up to the next resistance level. Okay, Bonk. We can go to Bonk. Let's see. Okay, there's Bonk. So I dropped all of these charts yesterday for Whale Room. If you go through to the Whale Room section over here, and I'll just quickly go into Captain's Take. I actually dropped all of these here yesterday. Look, there it is. There's Rune. That's what we're looking for, right? Sweep of the yellow. Look for the deviation. We got the deviation. All of these were dropped in Whale Room already ahead of time. Popcat, look at that. We're looking at Popcat. Big spike above. Let's actually go and have a look at what Popcat did. Popcat was also one that I picked. Perfect. Look at that. Beautiful, beautiful buy over there on Popcat, spiking back into the range. And now we'll see how high this bounce actually goes. Okay, ENS. Let's look at ENS. Let's look at ENS. Let's look at Pendle as well. ENS. Let's just see if I have the right one over here. Okay, I haven't looked at ENS for quite some time, so let's just re-look this. Okay, so kind of in the middle of no man's land for me personally. Yeah, ENS is kind of in the middle of no man's land. We'll just monitor and see how this one goes. I also want to look at Pendle quickly. All right, Pendle. Okay, Pendle coming all the way down. I'm sure no one thought that would happen. Coming all the way down, sweeping that level over there. Watch as the market starts to form a range. I know that RAN is pretty bullish fundamentally on Pendle, so it actually may be one to keep an eye on. Again, I don't advocate buying downtrends, but this one will take time, right? So if you see something like this and it comes back to revisit this region over here at about 220 and you see a slowing down market, maybe that could be the place to start to allocate. Reclaim over here at 330, and then you're looking for continuation onwards and upwards. That is on Pendle. All right, what else have we got? Turbo. I'll have a look at Turbo. Let's see Render quickly as well, since I'm right there. Okay, not looking good on Render, but now I don't have all the proper history because they changed the ticker over there, unfortunately. What was that question over there? The one that you guys just wanted was, now I've forgotten it. Turbo, that was it. Thanks. Turbo. There it is. Okay, so Turbo. Where's my little, there we go, my tool. Okay, there we go. Here's Turbo. It did hold this level. You can see SR flip. I'll zoom in to show you now. But definitely it got a little bit of a reaction off of that zone. Wick there, wick there, wick there. Wait for the slowdown phase. If you are holding this, great. I mean, you can raise your stops below today's open and give it a chance, see what happens. That is Turbo. All right, guys, remember, if you do want to learn more about trading, literally just go into the YouTube video over here, go through down to Whale School. You can sign up now while there is still space. It might actually be full from yesterday, but we have 15 days, 4 hours left. Use that link. Make sure that you join into Whale School. And then I really am impressed with this Bitfunded. The reason I'm impressed with it is because, you know, if you do take this challenge, remember, this is if you're trying to get your Bitfunded or at least your account funded by Bitfunded, and you can get up to $100,000. You pay an audition fee over there. I used $49. I got taken out of the position, of course, on a long trade because we're looking for the high low a few days ago. But now this is the benefit. This is where the benefit comes in. You're trading with essentially $5,000 for a cost of $49, and now all I lost is $49. I think for many new people, you know, you're better off paper trading, and when you can prove that you have a good strategy, come through to Bitfunded and actually try and get your funding. You only need to get 8% profit, right? 8% profit, but you're limited on how much drawdown you can get. If you do want to do that, again, there's also a link over here. Go through to Bitfunded. It's a two-step process though. Click step 1 over there, sign up, then close the account, then come through to step number 2 over here. And when you click that, it will take you to this page. This page offers different fees to what you'll get if you just go straight from point number 1. So come here, use the lower amount, right? Okay, I see there's a question over there on 𝗕𝗘𝗣. Yeah, we can have a look at 𝗕𝗘𝗣. 𝗕𝗘𝗣's been making amazing content. Go and have a look at the 𝗕𝗘𝗣 Twitter page. I saw the video this morning. It was absolutely hilarious with Michael Saylor and them. Okay, so here's 𝗕𝗘𝗣. This is still the resistance level that I outlined. You do need to get back above that. Here's your resistance, 0.023 up to 0.02368. Oh, that's all the same. There we go, to 0.033. So waiting to see if it can break above there. Hopefully this has found a bottom. You can see over here, even during the dump yesterday, you know, it didn't create new lows, which is at least a good sign. So waiting for ranging market after coming off a big move over there. Okay, let's look at WIF as well. We haven't looked at WIF for quite some time. I'm not sure how well WIF has actually performed in all this. All right. Okay, we were looking for a long on this. Of course, stopped out at the time, immediately broke down. This one's not looking good. I must be honest with you. It's just bleeding out, right? It's just bleeding out. So major worst case scenario support all the way down to 46. What would that be as a percentage? I mean, I can't see it going down 66% without the rest of the market doing that. But right now, your level to reclaim, at least see it get back above this zone over here at 1538. I honestly think the other meme coins look better. I personally would be looking to other coins other than WIF, like 𝗕, right? 𝗕 was one of them. We added a little bit to our 𝗕 long yesterday. Downsloping trend line or pivot level that you can view as temporary bounce zone coming into horizontal resistance. And that was the zone, right? Look for a little bit of a move off of that. All right, guys, that's it from me. I'll see you all on the next one. For the rest of you, I'll see you during the US Open on Whale Room Zoom session. Hope you all have a great day, and cheers for now.